All right, good day, Soldex community. This is a long awaited update video, and in this one, we will go ahead and walk you through the automated trading strategies and what we are planning to achieve. This video is only to cover the basics and the foundation of the whole upcoming system in general. So I believe this will become eventually a series of videos where we will be explaining certain things. But in this one, we would like to go ahead and provide you some information on the plan of the upcoming automated trading systems and strategies. Please keep in mind that this is a very early review and it's still subject for change. But at the moment, this is what we made together. So, first of all, the executive summary of what we're gonna be talking about in this video, and mainly we will cover three top priority things. The first one will be the explanations of the basics and the core principles of the automated trading strategies. Then we will move forward to the steps needed to enable such trading strategies, and also we will cover the biggest risks and rewards, security of the systems, and more. And finally, we will walk you through a bit of a very subject a roadmap of the development progress of such things. So if we move forward into the basics, it's important to mention these things. First of all, what is automated trading in general, at least within the Soldex perspective? This is simply a process where certain automated systems are analyzing the market movements and make the decision on behalf of the account owner, meaning that as an account owner, if you enable our automated trading system to work on your account with your capital, this means that the system, the fully automated system, will go ahead and make decisions, certain buy or sell or long or short positions. If you're using futures market, it will go ahead and trade on behalf of your name, which means that you do not have to do anything else. Simply enable the trading, choose the strategy, and simply wait and see the performance. The simpler version of such a trading system would be where the automated systems are acting as a helping hand by providing certain reports and signals of the upcoming, potentially upcoming market moves. But the decision is then made by the owner of the account, meaning that, for example, when you log into the dashboard, you will see a certain assets with potential moves that might happen in the nearest future. Let's say within the window of from one day moving all the way to the medium and longer term perspective of, let's say, a week or a month. And then based off the automated system analysis, which will be also briefly explained why the AI thinks that the market might move in one direction or another, the decision will be made by you. So the automated system will act as a helping hand. Now, the strategies to implement or within the AI to actually learn and to analyze the market, there are a lot of different variables. The top two things to understand are that the strategies must provide profitability over the long term perspective, meaning that all strategies must be backtested with at least 2 years of historical data. This means that we cannot simply say, make a guess if the market is going to go up or down, even though none systems can be sure what the market might do next. But we have to make the odds in our favor for as much as possible. So, with the use of a pretty complex technical analysis methods, we are aiming to build different strategies for a short term perspective, short term trading, also known as scalping or day trading in a way, all the way to the longer term perspective where the positions will be made using spot markets and not futures markets. And basically, uh, our biggest aim is, of course, to make sure that the strategies are providing positive returns within a longer term perspective, because that's the goal of trading is to make money. Also, the strategist must be balanced with complexity and simplicity to minimize the risk of error for the automated system, meaning that we cannot make the strategy super complicated, monitoring hundreds and hundreds of different variables before making their decision, which would then increase the risk of potential error for the system, and they may start showing false signals and making false decisions. Meaning that on the other term, we cannot make the strategies too simple as well. Simply buy if the price is above this, or sell if the price is beyond below that, or this, which is also would be more like a guessing. So with the use of complex technical analysis, which is not too complex to understand for the computers and systems, bots as well, we are building the strategies that are providing profitable results in a long-term perspective. I will not go too deep into the strategies itself in this video. I will cover I will cover them in the later videos, but of course, do not expect us to say fully, transparently how the strategy is working, simply because then we as a project will not have an edge as well. So I will explain some of the principles of the strategies, but of course, they will be not fully transparent for the edge for us as a project in general. And now putting it all together is also the ultimate goal, yeah, meaning that the development steps must be very strictly reviewed on a regular basis, and not just reviewed but also audited by a certain security specialist. Because with such automated trading decisions, of course, there are a lot of risks involved, especially within the risk of responsibility. So there are a lot of things to understand, where the majority of the community users may not even think about. Also, many private releases must be developed first and tested before any kind of public versions can be showed publicly as well, meaning that we might do certain invitations for a limited amount of users with certain knowledge as well, to go ahead and test the systems, try to break the system, and do everything, click on every single button, use all of their knowledge to test the systems privately, so we have as much feedback as possible before showing any kind of alpha or beta releases for the public as well, because this brings a lot of responsibilities for us as a project, meaning that we might show certain sneak peeks of the private releases, but the public version can be released only when we are sure and we are certain that the private testing went well. Now, if we move to the risk and reward section, let me go ahead and walk you through the potential risks of automated trading systems, also the rewards and some security aspects. So first of all, the potential risks, of course, there are many more, but I would say the biggest ones are, of course, the automated system errors that could end with false positions and or wrong position sizing calculations, leading to unexpected losses, which means that, once again, if we make the system too complex, or if there are certain updates from the different APIs or the systems that we use to develop these things, certain errors might occur, and the bots then will start making false decisions. This, of course, is unlikely to happen, but still it's a possibility because the computers tend to broke and the systems tend to broke. Even the websites that are completely static with no kind of interactions still tend to broke because of the servers, some hosting provider issues, etc. So all of that, because all of the computer systems are um, uploaded and hosted on certain services, first party services, which means that if those services can show any kind of issues, then of course our systems will struggle as well. So one of the risks is the bot error itself. Also, the connectivity issues between the backend of trading and exchanges themselves. This would occur only for the fully automated system, because then the system has to make the decisions on behalf of you. So if there are any kind of API changes or API timeouts or changes within the time window of how fast the information moves, when I say buy, and for how long does it take for the API and exchange to reach my order to buy, certain changes in these things can also affect how the bot or how the trading system might perform. And of course, the unexpected market moves causing extreme volatility can also be a risk for such a trading systems. Once again, it applies mostly to fully automated systems, because then when a certain events can occur, for example, something like the FTX collapse, uh, if such things occurs and the market starts to move extremely volatile in one or another direction, or in both perhaps as well, then it can cause certain risks as well, because the automated trading strategies are built with certain settings, and the system itself is looking for few elements to align before making a decision. And when the extreme volatility comes, it can cause the system to misunderstand certain moves. For example, the market shows an extreme upside movement within minutes. The system might think that, okay, it's a good time to buy or short or sell, whatever. But then it was only news and hype spike, and the market comes back down, and then the system thinks, "Oh, okay, so the market came back down, so now I should do this and that based off the settings and variables the system is looking for." And eventually this can lead to false positions. The system can open too many positions, or they can open wrong positions, etc. So this is also a potential risk. Now, looking at a bit of a more positive side of potential rewards for using automated trading system is, of course, that there is no psychological errors due to automated systems being computers and not humans, of course. Meaning that when a human is trading, when a person is trading, if the person is not very experienced in the financial markets, most likely, and most of the losses are based on their psychological issues. Certain psychological aspects of fear and greed kicks in, and the user tends to sell at the wrong time and buy at the wrong time as well. Most likely, and most common psychological problem is FOMO. If the market starts to push higher and it goes higher and higher and higher, eventually the user can feel the need to jump in before being too late, and the user will buy at the top, and then the market reverses, starts to go down, and the user will start selling at the bottom to cover the losses. These are most popular things, I would say. Yeah. So there are no psychological errors for the computers simply because they are working with a preset systems, and they are looking for the exact settings to be uh, to be green, so to say. Yeah, check, 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 and then they open or close a position. Also, you will spend more time away from the computer because the automated system will trade for you, meaning that you'll have more time. Also, there is no need to learn complex trading systems for you to trade manually because, well, let's be honest, a trading financial markets is a very complex thing to master, especially the psychological part, meaning that if you want to manually trade financial markets, you will have to learn a lot and a lot of things. There are a lot of variables involved into financial markets trading. uh, some of them are, of course, a technical analysis, chart analysis, which involves understanding market structure, certain indicators, price action, candlestick formations, etc. Also, if you want to be um, a bit of a more versatile trader, you'll have to learn fundamentals as well, knowing how certain events can cause certain economical factors, economical releases, or also certain events, what kind of reactions can cause in the markets. So you have to learn all of that manually if you want to trade by yourself. Using automated trading systems, you don't need to learn any of that. You simply have to, first of all, analyze the past performance of the trading system. And if you're happy with it, you can go ahead and enable it and it will trade for you. Meaning that the only analysis you are taking on is to understand how the system works and how it performed on a historical data. And also, there is a higher profitability rate due to consistency, knowing that the computers, they will trade as consistent as the strategy will let them, meaning that there will be no um, feel or no need for certain changes to the strategy, to modify the strategy, etc. This, which means that if the strategy is consistently profitable, your profitability will also be consistent and usually higher than manual trading, because manually people tend to make mistakes and people tend to modify certain things. For example, if you've been using the chart on the 1 hour time frame, after a few weeks you may choose 4 hour time frame or 15-minute time frame or daily or something else, meaning that you might start feeling the need to modify something, which will, of course, bring some negative, potential negative results. So, when the automated trading system works for you, there are no such a things, there are no such a risks, because, well, it trades the strategy that it's developed to trade, and there will be no modifications made by the system itself just randomly. Some of the security aspects that are important to cover as well. Such automated systems will need access to the owner account information. This is for sure. And this is for sure can cause certain issues because you have to enable the bot to trade on your account. So the solution for that is, of course, to use APIs, which is one of the most popular ways for a trading bot to work. When there is a bot and there is an exchange, your account, your capital, and then the bot connects to your account using API. But there is a potential risk of hacking, and we saw many similar hacks happening not within the crypto trading only, but also the forex trading, stocks trading, etc., where simply a certain API issues that can cause that can be caused completely not dependent on the trading systems at all, but simply by the other side of the provider, can cause certain things where hackers might get access to user funds, or they might get access to the ability and the options to make decisions, so they can interfere with a trading systems. Yeah, of course, APIs, they have settings where you can enable or disable deposits or withdrawals. So if you have them disabled, this means that nobody can withdraw or deposit assets, without you manually doing that. But knowing that humans are tend to make mistakes, especially where it comes to inexperienced financial markets uh, decisions. If you left the stick unchecked, for example, or you left it checked that this API can get access to deposits and withdrawals, then a certain risk can occur where hackers might actually steal your money. This is not very, I would say, common, but it's still a possibility that we have to take care of. So this the solution for that is definitely to warn a person and make the person confirm multiple times that the person set the correct settings. And also, of course, there are certain legal aspects where a certain part of the users will always blame automated systems for the potential losses, because let's be honest, non-trading systems are, let's say, always profitable. Yeah, there are no such a thing as a 100% win rate in a financial markets, meaning that sometimes you may see losses, sometimes you may see a big wins, big losses, small wins and small losses. It's all depending on the risk approach, risk management, etc. So some people will never understand this fact that using trading systems that are trading on behalf of your name is always responsibility of yourself. Only when you make decisions manually by yourself, only then you can blame simply yourself. But some people may think that, okay, so this bot lost me some of my money, so it's the bot mistakes, and I want to get some sort of a legal actions against the bot, which in this case is definitely not a correct approach, because bots will never be blamed, so to say, for certain decisions they make, because nobody blames no one if they make money. But as soon as some sort of a negative thing happens, some losses or something like that, some negativity, maybe a connectivity issues, whatever, they tend to go ahead and blame the system of being um, malfunctioning. Yeah, so this is also something to take care of as a team, as a project. And now moving into the early roadmap, what we are seeing, of course we cannot give you a very specific timing for that, because this development is definitely a major one and it's extremely complex. So the very first thing is of course the strategies backtesting and performance reviews that is already well undergoing, and we will share some more insights about the strategies and how they are performing for the historical data on different um, asset classes, and we will show you that in the later videos. Then we will aim to present the first dashboard of the automated systems and their analysis, where you will be able to see different assets and different kind of analysis that the systems do. Then we will aim to provide our first fully automated system private testing, which means that certain users, a limited amount of users with certain knowledge, will be invited to go ahead and participate in the testing phase of the system. So we will go ahead and give you access to the bots, trading systems, and we will see how it performs under the live trading conditions. And eventually, as the end goal, we would like to send our first invitations to limited users for a public use with our trading systems, meaning that more people will get access to the bots. We will try to reach the limits. We will try to find the breaking point, and then, of course, optimize and improve the systems to handle uh, more users, more requests. So this is a very subject roadmap. It's not very detailed, but that's because certain details are changing on a daily basis here. So we cannot give you a certain step-by-step plan because those steps are constantly changing. So we want to give you a brief roadmap with a bigger picture before we go ahead and scale these things down into smaller pieces. So hopefully this update video was beneficial for you. You will have a bit more understanding of how the system is going to work and at least what kind of things to expect in the future. Thank you for listening, and I wish you all the best.